Okay, folks, welcome to this week's Fife Property Market Update from the 12th of March to yesterday, the 18th of March. This is a whole look at the week itself just past. The number of properties actually come onto the market versus the number of properties sold. Gives a good indication about how stable the market is, if the market's not stable at all. I'm also going to be talking about possibly, I think, give me 2 seconds, Barney. You have actually asked me about property in Dunfermline, whether you should actually offer an over-the-home report at this point in time. I'll give you a wee bit of advice towards the end there, Barney, so listen out for that. Talk about how the budget's going to impact on the housing market. Also, how Credit Suisse is quite an interesting one. They are actually at the process of getting a bailout from UBS, the Swiss bank, how that will affect the property market. But let's dive right into it and talk about the current figures right across the Fife property market. Okay, so here we are for last week. This is quite interesting. Again, a really good stable market as far as I'm concerned. It shows right across the board. You can see there in the Cooper area, 7 properties actually instructed, 7 properties sold in the same week, 5 versus 5 for East Neuk, even Stevens again. St Andrews 14 versus 9, that's no surprise because St Andrews top end of the market. Leavenmouth 11 versus 9, Dunfermline demand 60, outstripping supply 50. Glenrothes 16 versus 14, and Kirkcaldy 38 versus 28. Now that's because there's a lot of new build in the Kirkcaldy market, but the previous week and the week before it was actually the other way around. So it'll be interesting to see when we get to the end of this month in March, when we look at the whole month in summation and accumulation to the month itself, when all these numbers added up together on the weeks to make up the month, how that will pan out. But I've got a funny feeling I know where that's going. Let's talk about what's coming to market as well and what's actually been sold in the week. This is actually quite interesting. This actually paints a really strong picture for the Fife property market. So let me explain why. And we'll talk about some of the ones that have actually sold during the week with us. Now, sold means it's sold in the week, it's under offer, but it's still subject to concluded missives. In other words, somebody's made an offer, it's been accepted by the seller, it's got to go through the legal process of conveyancing now, and then it will be keys handed over. So that's where we are in terms of sold, subject to concluded missives. So let me give you an indication about what's been sold this week with us. So here is Billsland Road in Glenrothes. That's actually sold in 4 days. You can see they are sold in 4 days. 3-bedroom mid-terraced house, and it was new owners, first-time buyers, and it was listed at offers over 145,000. So this one in Billsland Road in Glenrothes sold in 4 days. The next one is Lovers Lane in Cooper, sold in 1 week, basically 7 days, 2-bedroom detached cottage, and it was a downsizer that actually went for this one, and it was listed at offers over 200,000. 2 other people missed out on this property, by the way. So we've got people looking for typically a 2-bedroom detached bungalow or cottage. So that's the type of property we're looking at, round about the 200,000 mark, because that's where their price point was as well. So if you've got something like that, or you think your property might be worth that in the Cooper area, then feel free to contact us, because there is definitely strong interest in this. You see how the narrative has changed since the Liz Truss budget that I'm talking about now. Sold in 4 days, sold in 1 week. People missing out. That gives you a strong indication about where the market is. So let's pop on to the next one. This is Shuttlefield, Newborough. This sold in 3 weeks, a 2-bedroom detached house, and somebody looking to retire, basically. Thought this was the ideal house for them. This is offers over 240,000. Listen, 3 people missed out. In other words, there's 3 other people in the pipeline waiting to offer, wanting to offer. So 3 other people missed out. There is demand for property right now. We'll go on to the next one, Hayfield Road in Kirkcaldy. This is sold. This took a wee bit longer than usual. This actually took around about the 4-month period, but that's okay, because that's why we typically say it's probably on average right across the Fife property market that averagely it takes about 2 months to sell a property, or just under, maybe about 6 weeks or thereabouts now. There's 880 properties on the Fife market right now for sale. Now, when we were getting an oversupply at the beginning of the year, it was round about 1,000. So you can see how that's come down, which suggests to us that there's actually more people buying since the start of the year than there is actually selling. So you can see how demand is beginning to outstrip supply again, and where we're going with this. The budget is probably our key indicator here, and I'll talk about that in a minute, how that affects things. So there it was, a 4-bedroom terrace house in the Hayfield Road in Kirkcaldy, and this was first-time buyers. Listed offers over 140,000. So if you've got a property like that in the Kirkcaldy area, please feel free to contact us if 140,000 and above is probably your price point. Dunakeer Road in Kirkcaldy, sold in 2 weeks at a closing date. There we go again. Sold in 4 days, sold in 1 week, sold at closing date, people missing out. What does that suggest to you? The facts don't lie. It's right there in front of us in black and white. So 3-bedroom detached bungalow. New owners were excited to take on this new project because this has needed a wee bit of work on it, but it was listed at offers over 200,000. 3 other people missed out. There's the message again. Okay, Toll Road in Cellardyke. This took a lot longer than usual. This was, this was a classic case. This is quite a unique property, so it was a unique person that wanted to buy this property, a 3-bedroom townhouse on 3 levels itself. The owners are excited. They're excited with their new home. This was listed at offers over 380,000. So this was actually, there was a lot of interest on this property, but it just didn't, it was just needed the right people to walk through the door. So it took a bit longer than usual. The next one here is East 4th Street in Cellardyke, sold just under 2 months, 4-bedroom townhouse, and new owners looking to relocate. So moving in. So listed offers over 300,000, and that's away as well. The next one is actually quite an interesting one. This is James Street. This is Loungeabout. So this is the downstairs commercial property. Now this had gone back on the market because the original sellers, it took a couple of challenges for them. They decided that it wasn't what they wanted to do, or it wasn't in their remit anymore for their portfolio. So it went back on the market and sold within a month quite easily. So new owners happy with their investment, and it was listed over 100,000, and it went in excess of that substantially. Okay, so what does this tell us? And I'll tell you about what's coming to market in a minute. What does this tell us? Well, let's talk about the budget and roll this in and give some summation to the property market and where we are right now with it. The budget, I don't know if you saw it during the week, and you got some headlines out of this. Energy caps again for another 3 months. 4 million people on prepayment meters. The charges will be in line with the direct debit charges of everybody else. So that's making it more affordable for people to buy. 63 million fund to keep public leisure centres afloat, and that's in other words swimming pools. Duty for pubs brought in line with the supermarkets. 12 months freeze on fuel duty, and leave the 5% cut in fuel duty per, I think it's per litre, in terms of the tax. Which is actually quite concerning, the debt ratio to GDP, which is gross domestic product, which is kind of like the UK's turnover or their sales, if that makes sense, is 95%. That's just quite high. That's extremely high. But there is other countries like America and Canada that are far higher than that. So it gives you kind of some comparison about what the debt to ownership ratio, the debt to equity ratio is in terms of UK PLC. Now that they predict, the Office of Budget Responsibility predict, with the forecasting that the government's doing in terms of what they're doing for the economy, that'll probably be down by 3 percentage points lower in the next 5 years, which is a good thing. Growth this year, they reckon, no recession. So all of a sudden, from 6 months ago, 9 months ago, where everybody was terrified because the government and even the Bank of England was saying there was going to be a recession, going to be a recession, going to be a recession, miraculously, there's no recession that appeared. So they reckon it's actually going to be even Stevens this year in terms of growth. It's going to be minus 0.2, which is basically zero. The following year, it's going to be 1.8 in terms of growth. It's going to be 2.5 in terms of growth, which is good for stability of the economy. Unemployment remains historically low at 3.6%. And Scotland has actually come down just another 0.1 percentage point, which is actually very encouraging. The budget Office of Budget Responsibility actually believe inflation by the end of the year will be 2.9. Well, I'm not really sure about that. I've got a funny feeling inflation is going to be a wee bit higher by the end of the year, but they predict it based on the government's figures and what they're predicting, that it should be 2.9 by the end of the year. I think the government's target at this point in time is to get it down to around about 5% by the end of the year, which is more tolerable. 2.9 needs a lot of things like base rate rises and tax increases to curb spending in order to bring that inflationary level down, unless there's things that they haven't divulged that we don't know about, to bring that down from almost the 10% level to down to about 3%. So 7 percentage points, that's a tall order. That's about 70% reduction within 1 year. We're about 9 months to the end of the year when you look at it, because we're now in March and almost at the end of March. The other one as well is actually only 10% of UK companies will pay 25% tax, corporation tax, which is quite encouraging because then it allows reinvestment. But they've also said that the reinvestment into the economy, if companies spend money on capital, in other words, plant machinery and IT and stuff like that, they will give them 100% deduction against their profit straight away, which will encourage companies to actually reinvest profits back in to the actual business itself, which is great for efficiencies, great for employees as well, because they're getting new kit, new machinery, and great for overall manufacturing, production, and service industry. 7 million adults of working age are not in work, so there's an encouragement there about getting people back into the workplace. What will raise more taxes, which will bring more revenue in, which will be better to actually reinvest in our economy as well. 2 million job seekers, more sanctions on not accepting work. That's understandable. That's what they always do. And another, yourself, you've heard about the pension boost as well for the age 50 plus, as there's so much talent and experience getting lost. I've got a great belief that people that are age 50 and over have a huge amount of experience, life experience, and also wisdom about the commercial reality of how businesses are run and how to interact with other people. So I think that is the best way to go. They are trying to encourage people back in, like the doctors, and keep them in that by increasing the pension allowance. Whether that's right or wrong is a different case. Could have been other ways they could have done that. And they're going to abolish the lifetime allowance and pension contributions as well to encourage them to stay in, because a lot of doctors and that are leaving for that reason, and also dentists and professionals in that sort of sphere. How does that affect the Fife property market? Well, it's actually given a nice stability to the economy. The stock market was very encouraging and good response. Swap rates are still really good between interbank rates, which means mortgage rates stay stable. You got a 5-year fixed rate deal under 4% right now, which is very encouraging considering base rates are at 4% as well. So that's all these signs are very, very encouraging for a stable housing market. Now, I say stable, that's the most important thing out of this. That's what we really want. So the flying ointment right now, good evening, Perry. Thanks for watching. If you've got any questions, people, please feel free to ask them. More than happy to answer them. The flying ointment right now, I think, is the Credit Suisse scenario. You had a bank in America which was in trouble. They had since been bailed out and bought over by another bank. Credit Suisse, the second largest bank in Switzerland, has actually come under fire as well. Their liquidity is in jeopardy. Now, the media is trying to blow this out of proportion, I would say, in order to cause some sort of panic in the banking sector. UBS has actually stepped in and they're looking to take over Credit Suisse for $2 billion. Now, when a bank's really in trouble and there's no really asset worth to them at all or long-term prospects for them, banks usually step in and they'll take them over for next to nothing, $1 as a token gesture. But for UBS actually to take them over and say, we would actually pay $2 billion for them, suggests to me that the medium to long-term prospects for Credit Suisse is actually very encouraging. And this is only a short-term thing that happens. Now, if you don't know what happens in the banking sector before public disclosure, many years ago, what happened in the banking sector when a bank like Credit Suisse got into trouble, every other bank just came to the rescue and invested in that bank and then bailed them out. And it was a rising tide lifts all ships to bring some stability to the market without anybody actually knowing. It's only because we've got, we've got full disclosures now in our system and the use of social media and other forms of media to report these things that, these stories get out and sometimes it can cause panic. Hence the reason why the knock-on effect to the stock market right now is gone from the FTSE 100 has gone from 8,000 points down to about 7,300 points. It's dropped about 10%. Now, most people could run for the hills, and this is just my personal opinion. Most people run for the hills when the stock market drops, but when the stock market drops, there's opportunities to buy, definitely, especially in the FTSE 100 itself, because they're all blue chip stocks, which actually are good earners. They're good returners as well for pension funds. So there's a golden opportunity there to actually take advantage of that situation and possibly that 10% dip, where you could probably reinvest. I've done it anyway, right now at that level. And then when it jumps up in the next month or two, once there's a bit of stability back in, you've made an instant 10% return. And if you've done it on a FTSE 100 for your pension, well, this is getting a bit into the wealth creation show. You could actually get the benefit of the tax back on your pension contributions as well. Anyway, this is a wealth creation show. We'll talk about that in a minute. We're going to talk about wealth mindset tomorrow on the Wealth Creation Show, and I will cover that and just the headings we're going to talk about there. So that's my thoughts. Stability more than anything. I'm just ticking off my wee points here on my sheet. What I wanted to talk about, Credit Suisse, how that will affect things. UBS is predicted to actually do this deal before the stock markets open tomorrow because they want to provide that stability. The other thing you need to watch out for before I announce what's coming onto market soon. The other thing we need to watch out for is the house price index. It's out on Wednesday, UK house price index. This is the one that matters, the UK house price index. Never mind the Halifax index, never mind the Nationwide index, never mind the Zoopla index, all the rest of it, because that's based on their limited information. They don't have the full picture, whereas the UK house price index is based on all the number of houses sold in a time frame right across the whole of the UK, collated into factual information. So it'll be interesting to see where that is on Wednesday, which I will do a broadcast about, more than likely about that, and then tell you where it is. I would think that house prices would have dropped a wee bit, and that's okay. And I would predict it. We're probably just back round about March last year in terms of house prices itself, because we've gone on a peak. We're starting to level off a bit. And as I said, most people are actually predicting towards the end of the year will be between 5 and 10% reduction in house prices year on year. Even though right now, UK house prices will probably say that year on year we're about 5%, and the same with the Fife housing market as well. So that's things to watch out for this week. Just ticking that off. Okay, so what's coming onto the market this week from us? So watch out for Alexandra Street in Kirkcaldy. There's a 2-bedroom ground floor apartment will be coming on this week. The Roundall London Links, 3-bedroom detached bungalow, hence teeth. So watch out for that one. You need to register now with these ones. I've just told you, gone in 3 days, gone in a week, gone in a couple of weeks. People missing out. You need to register now. If that type of property is something you're interested in, contact us. Message us direct about the property I'm talking about, or contact us on 01333 421 01334 65 42 21 and 01592 75 2000. These are the numbers to contact us on. Any sales numbers, you can find them on our social media and our website as well. But ideally, just message us direct because you're watching on this post anyway. So the Roundall London Links 3-bedroom detached chalet bungalow, High Street, South Crail, 4-bedroom maisonette. That's a beautiful place, the High Street in Crail. High Street in Falkland, I did that at the Friday, I think it was. I did a pre-portal launch for that one. So that was High Street in Falkland. That was I believe that off the top of my head, I think it was a 5-bedroom detached house, although I've got a funny feeling it's 5-bedroom, 3 reception, or 6-bedroom, 2 reception, and 3 bathrooms, or 3 levels. It's immaculate. Grade B listed property. It's gorgeous inside, but you'll see the pre-portal. It's on our social media pages. West End Cottage, Colessi, 2-bedroom semi-detached house is coming on the market as well. So these are the ones coming on the market this week. If anything there interests you, register with us now, contact us now. So we've got your details so you can find out before anyone else, just about before the pre-portal's done. We could probably tell you beforehand. If you are in a position to proceed, you have got a golden opportunity to possibly jump in. I will tell you, there's 2 properties in the Crail area have actually gone and they've not even made it to the websites or even social media. They've gone off market. Again, I come back to saying, sold in 4 days, sold in 1 week, 2 people missed out, 3 people missed out, sold in 3 weeks. Gone, 2 of them, before it got to market, before it was even on a website or a pre-portal. What does that tell you about the supply and the demand? Consumer confidence is here still. Definitely. Stable property market, if we look at the numbers. But that's the most important thing. Stable property market, but it's not the days of putting your house on and saying, oh, it's going to go in 3 weeks or 2 days or 1 day, because Jim said, these days are over. Okay, realistic here. You need to get an estate agent out and assess your situation first before they can predict anything like that. And do not make assumptions. Assumptions are what kills everything for you. All your plans, all your stress comes on as well, because there's a lot of assumptions made and how quick everybody else tells you your house will probably sell. But in actual fact, you don't know till you put it on the market. So that's the most important point, is to get the advice, get the facts. I've been out to a couple of properties this week in the Arncroft area, actually, and in the East Nuke area, in order to give that advice out to people, to know, to put them in the position so they could consider when they want to proceed to the market. That's the most important point to do. So that's what I can tell you there. A couple of shows that we did during the week. Selling your rental home. If you're an investor, if you're a landlord, you're looking to sell, and you're looking for the perfect exit plan without losing your tenant or your income, click on the link on here. You can listen to the podcast, you can watch the show, or you can read the article. The show and the podcast gives you a lot more information, a lot of insights from me personally, because this is something I've been doing for 30 years in property investment, buying and selling property for investment purposes. So I've given a lot of insights into the podcast and the show in this. The next one is actually Now or Never, which is actually quite a good one. We did a midweek show, Perry and I. It's now or never. Is it now or never for the Fife property market? Traditionally, the first 4 months of the year are usually the busiest time. You can see that here by what I've just said here, and house sales. However, in the last 3 years have taught us nothing is normal and unusual anymore. You can't assume and take things for granted. You need professional advice to move forward on a level footing and actually understand where you are and where you can be. That's why you get an estate agent out to talk to. Some of my track record, by the way. Okay, and the Wealth Creation Show tomorrow, and I'll answer a couple of questions on here in a minute from Barney and also from Biggie Smith, who's on YouTube. So I'll answer these questions in a minute, guys. The next one, 4 ways to develop a wealth mindset. Wealth Creation Show, we're going to talk about this tomorrow, Richard and I. This is based on my personal experience as well, and how I went from homeless unemployed to retired at 38-year-old, which was 19 years ago now, and being financially free. So this is what was based on. So 4 ways to develop a wealth mindset. Some of the things we're going to talk about is, why does a wealth mindset matter? What is a mindset? And what is a wealth mindset? What is a poor mindset? And then we're going to talk about the 4 things. And the 4 titles are going to be setting goals, being patient, and persevere. Then we're going to talk about investing for your future today. Probably show some examples of how I've done that. Maybe show you my pension as well and how that's grown and how I've utilised that in order to be tax efficient in terms of my overall wealth generation. Never stop hustling. Every single time. There's always opportunity. Preparation, preparation, preparation. Because the point of readiness is when opportunity meets preparation. Prepare, prepare, prepare. That's all you can do at this point in time. If you don't know what you're doing, where it's going, all the rest of it, keep preparing for that opportunity. When it appears, that's the point of readiness, and you can jump in before anyone else. That is why somebody gets a house before you do, because they've prepared for it every single time. So we're going to talk about that, about never stopping hustling, and also maintaining a positive attitude. It's easy to maintain a positive attitude if you understand the dynamics and you understand where you are right now. And I would say a lot of people actually look at times where, you know, it's hard times, it's lean times, it's recessions and stuff like that. And I'll give you a wee insight into the wealth creation of that. There's more millionaires created in a recession than there is at any other time after that, after a recession. And that just shows you, what does that tell you? These people have prepared, and when the opportunities appeared, they were in a position to do something about it. And then I'll talk about tomorrow is how long does it take to develop a wealth mindset? That's the finite golden question. I could actually quantify that quite easily, but I will talk about that tomorrow. Right, okay, a couple of questions. Here we go. Barney, I've seen a property I like in Dunfermline. Here we go. Home report value is 290,000. We have already had offers, but no idea how much. How much percentage of the home report would be sensible in the current market? Sensible. I'll leave that up actually. Sensible. What's sensible? Okay. There's no right or wrong answer to this, and there's no finite 2%, 3%, 4%. I do know the days of 10, 15, 20% over the home report value are actually gone. Most properties are actually selling for around about the home report value now, if not just below or just above it. That's a fact. We know that because all the prices have actually caught up from the very beginning. All these increases have actually now flowed through the system, and the new home reports that are getting done are based on all the historical increases of 15 and 20% that actually have come through. So that's why all the new prices that are on home reports are being rebased based on that information flowing through now. So that's why home reports tend to, how property prices now are going round about the home report value, because we've got to that realignment price, which is about 6 times the average income, which is actually quite a stable market for Fife. That I get the reason I get 6 times average income. Average income is about 30,000 in Fife. The average house price is round about 175,000 in Fife, which is around about 180, which is round about 6 times. That's how you get it. And 6 times or less is a really good market to be in. It's still really affordable in terms of the price point, in terms of more traction to go, especially if you're property investing as well, actually. Okay, so my answer to you, Barney, is when you make an offer on a property, the most important thing is how much do you really want that property? And people say generally, I don't want to offer too much. But then my point to them is, then what happens if you miss out and you lose it? Would you regret it? And they went, absolutely. Okay. So you've got to find a point where you're comfortable with offering, where if you actually offer and get that property, and it's in your affordability, if you offer and get that property, then you'll not resent the fact that you've overpaid for that property, if that makes sense. But also the flip side of that is, if you offer that amount and you lose that property, you'll still feel okay with yourself that you actually made the offer that you thought was the right price for you, and you can walk away with your head held high. It's that kind of thing. This is not about getting a property at all costs. It's about making sure it's affordable for you, but making sure you're also happy that you've not overpaid, or you've not lowballed it to try and get it at a cheaper price and missed out on it. So it's the difference. It's the regret thing. It's the regret thing that you're needing to think about. That's what you need to do, and that's how you'll find that magic number. You don't know what that number is going to be because you don't know what everybody else is going to be. You can't predict that, but you make the offer it's worth to you. Now, generally, what I'll say in an offer is if you're going to stay in that house for 20 years and you think to yourself, okay, if I'm going to stay in it for 20 years and that property is 290,000, for example, and if I offered 310, would I regret that? Now, to me, that's another £1,000 a year for getting that property you really wanted if you actually get it. So if I get it, will I be happy? And if I don't get it, will I still be happy I offered the right price? It was worth it for me, and walk away with my head held high. And if that's the answer, then that's your price, I would say. But it's all about how long you're going to stay in it. Plus the fact, remember, be aware that if you're going to stay in it for the very short term, in other words, the next 2 or 3 years, the entry and exit costs of buying and selling a property and possibly the volatility, it wouldn't be volatile, I mean the stability of the market really, but the fact that it will go down towards the end of the year would suggest if you were going to sell this in a couple of years, that you'd probably get the same amount of money, but then you've obviously got all the fees for the exit. Then the entry and exit fees will be prohibitive. You may as well go and rent for the next couple of years if that's the case. That's my advice. Hopefully that's given you some insight into the right advice on what you should be doing. Don't over-egg it. Don't lowball it. Make the price that's right for you. Okay. So hopefully that's it. Okay, Biggie Smith. I'm usually afraid to put in an offer, but should I be? I'm unusually afraid to put in an offer, but should I be? No, I genuinely don't think you should be. Again, I'll go back to exactly what I said to Barney Rubble and his one. No Fred Flintstone's Barney Rubble, but that's his tag name. So I'll say exactly the same to you as well. I wouldn't be afraid. I'm in a process of buying a portfolio at 1.9 million. So I've got my reservations and I've worked my numbers and I understand where I am. And when that's about to go over the line, I'll know where I stand and I will be able to fix the right amounts exactly how I want in terms of my finance, in terms of occupancy rate, in terms of everything else. I know the stable market now, and I'll talk about that on the Wealth Creation Show tomorrow. So I'm particularly vigilant, but I am not unusually afraid. Because again, I'm in this for the long term in terms of property investment. So there's never a point I would actually sell. So as long as the income is generating enough in order to cover all the costs and have a good return, where it gives me a good degree of tolerance in terms of sensitivity analysis, which is, you know, if your mortgage rate goes up, how does that affect your numbers? If your occupancy rate comes down, how does that affect your numbers? If your rental level on average comes down, how will that affect your numbers? And if all these combine together just on a smaller scale, how will that affect your numbers at the end of it? And that's financial modeling. Then I would always have a degree of, yeah, okay, it makes sense. Even though what everybody else says, I couldn't care less, because I know the numbers and I understand the whole dynamics of it. Because I've been doing this for 30 years. So yes, you might be unusually afraid to put an offer in, but I think that's just driven by the media in terms of the overall picture they try to paint of what's going on in the economy. I think the economy is still quite stable. I think we've maybe got a hill to climb rather than a mountain to climb over the next couple of years. There seems to be this impression, but you can see there where we're given all these indications from the banks and even the government that we were going into recession. And when I looked at all the numbers at the time, and for the last 6 months, I've been saying consistently, I cannot see a recession, and we are not in technical recession right now, which is two quarters of negative growth. And now, you know, 6 months on, or 9 months on, 6 months to 9 months on, the government surprisingly comes out, and the Office of Budget Responsibility suddenly comes out as well and says, well, we're actually not going to go into recession now. Tell me something I didn't know. Because the numbers didn't lie. The numbers were right there in front of me. I couldn't see anything different. I questioned it every single time. I looked for evidence to the contrary, but I could not find any other evidence. And at this point in time, I can't find any other evidence to suggest that we won't have a stable, good housing market. I'm almost no, I wouldn't say there's I wouldn't say there could have been another boom. But judging on what I've just said there now, the very fact is, I was saying, sold in 4 days, sold in 1 week, 2 people missed out, 3 people missed out, sold in 3 weeks, 2 weeks at a closing date, 3 people missed out. And just what I've said now about what happened this week, I think a lot more people are beginning to realise it's like, this isn't what everybody said was going to happen. This is far better than what everybody said was going to happen. And maybe the opportunity now is to jump and actually get something now. And my answer to that is yes. The answer is always now. It is the right time to buy. It is the right time to sell as well, because remember, we buy and sell for our circumstances. You don't buy and sell to make money if it's your own house. You just don't do that. That's few and far between. That's people live and upgrade and do it so it's capital gains free. You buy and sell because of your circumstances. You're in a big massive house. It's costing you an absolute fortune to run, and the council tax is horrendous, and the utility bills are horrendous. It's like there's only 2 years rattling about in this house, and it's like I'm going to sell. There's no point in outlaying all these costs. This is horrendous. This garden's unbelievable to manage. That makes sense to sell. That's circumstances. And then equally as well, I've had more children. We've got another baby on the way, in another 2 or 3 months' time. So let's get a bigger house to accommodate for that. That's circumstances that drive all that. No one buys and sells for property prices. No one does that if they're living in the property. You buy and sell for the reason. So coming back and just finalising there as well, just to say, watch for the numbers. The numbers are the key here. This is the one I'm talking about here. I'll jump back to here. This is what you should be watching, not property prices. The health of the housing market is based on this. I'll take that off. The health of the housing market is based on these numbers. The stability is the number of transactions. And if you've got 140 properties, that's 20 every day times 365. You've got 7,300 properties on average selling a year in Fife. That is a record, by the way, for the number of properties actually buying and selling in Fife in a year. It won't work out like that. It'll be a bit less than that because this is now getting into peak season. But you can see there where 20 properties are bought and sold almost every single day in Fife, because that's only a week. That's 7 days. 140 divided by 7 is 20 properties came onto the market each day. So 20 people in Fife made a decision to sell a house, and almost 20 people decided in Fife to buy a house. That's where the stability is. If that number stays similar, about 20 every single time, every day in Fife, we have an extremely stable market. And property prices will not really reduce. They'll only reduce because possibly people maybe don't want to pay as much as they did before, but all the numbers are factored in to the house price increases now from the previous prices it would have actually come through to set the new home reports at the right level. That's why we've got, so house prices, the amount it's going over the home report value shouldn't be a panic if it's going over less now over the home report value, or houses are still selling at home report values. That's not a market to panic in. That just means we're realigned to the right price points in Fife for the whole lot of the properties. Now, I talked about this about 3 or 4 years ago to say that Fife itself was very historically low in terms of the multiplier for the average salary compared to the average house price, especially with interest rates at that level as well. And that's kind of no changed. Interest rates on a fixed rate for 5 year fixed rate deal, 2 or 3 years ago was probably about the 4% level as well for a 5 year fixed rate deal. So there's nothing really changed here except prices have actually caught up with where they should have been, and they should have been realigned. As I said about 3 or 4 years ago, that Fife was due for a realignment in property prices because that multiplier wasn't at the 6 times anymore, and that's always been a strong indicator to if the property market is undervalued or overvalued if it's not round about there. Now, if you look at the Scottish house prices, they're round about the 7 to 8 times. The English house prices are around about 10 to 11 times. So they are overvalued in comparison. So England, you know, will there be a realignment there? Will prices come down a bit more dramatically? Probably more than likely. But that's expected, because that's always what happens. But if you look at the price curve from 1984 in terms of property prices, you'll see the English property prices since 1984, and I'll dig it out somewhere because I've got it somewhere, go like this. Property prices up and down, up and down. So they'll be wavy, but still going all the way up. So there'll be peaks and troughs all the way up for the English price property market. What you'll see in the Scottish property market is you'll see a nice steady curve going like that, all the way up, on a nice curve all the way up. There'll be no swings and roundabouts, there'll be high and lows. I know you see that sometimes because you're in the moment and it's in that isolated incident where prices have dropped 10%, prices have dropped 20%, and you see that dramatic drop. But over since 1984, that's smoothed out and it's a nice smooth curve going on up. So the prices, the house prices in Scotland are extremely stable, and they don't do big peaks and troughs in terms of the house price levels, as well as the number of transactions in Scotland as well, because again, Scotland and Fife especially is extremely affordable in comparison to the average salary in the UK and Scotland and in Fife itself. Why on earth, if your average salary, and this is a fact, if your average salary is almost the same as it is in Fife, as it is in Scotland, as it is in England, and your price in Fife is around about 175,000 on average for a property, and it's 545,000 in London, and it's 195,000 to 200,000 in Scotland, and you can work remotely, why on earth would you want to live anywhere else that's dearer? If you could live in a more affordable area and work remotely and actually be even in the middle of Fife, you're within almost 10 to 15 minutes from a beach, and the Fife Coastal Path is all the way around. You're literally in God's country. You can go anywhere in Fife within, you know, an hour. If you're there, you can go one end to the other within an hour to Fife easily, and you could go anywhere you want and just arrive back home easily without any hassle at all. You have literally got everything you want on your doorstep without having to travel the whole length of Scotland and England in order to get it. It's right here in Fife. That's why they call it the Kingdom of Fife. It's literally God's country. And everybody else doesn't realise that. And we take it for granted. Anyway, hopefully I've given you an insight into the property market and how things are going. And I've answered these questions as well. And I'm going to wrap up there. Thank you very much for listening and tuning in. If you have and you're on the catch up, please feel free to contact me, message me or whatever if you need more advice, more help and more support. And I'll see you tomorrow. The Wealth Creation Show with Richard Cook. We'll be doing our 4 ways to develop a wealth mindset. This is for everybody, by the way. Even if you're stony broke right now, it could be completely different for you in the next 20 years. Just with doing things like this. See you tomorrow at 12:30. Bye-bye for now.